Namaskar and welcome to our series of programs on the Indian economy. Today we are going to look at how the Indian economy is poised for double-digit growth. Several rating agencies have given India a double-digit growth profile for the calendar year 2021. And based on this, we're going to look at how India is now capable of re-establishing that $5 trillion target in the next 5 years. Taking us through this discussion, we have two eminent guests. Let me introduce you to them. Vinit Agarwal is the president of the Associated Chamber of Commerce and Industry. He is the managing director of Transport Corporation of India Limited, is a graduate of Carnegie Mellon University, USA, and has also completed the Owner-President Management Program at the Harvard Business School. He was awarded the Young CEO of the Year 2014 by CEO Magazine and the CEO of the Year 2018 by the Indian Institute of Material Management. Dr. Shekhar Tomar is an economist. He is assistant professor at Indian School of Business and a former research economist at the Reserve Bank of India. He did his PhD in economics in 2017 from the Toulouse School of Economics in France and his master's in economics in 2010 from the Delhi School of Economics. So let's begin. Mr. Agarwal, thanks very much for being with us here on DD India. So Budget 21-22 has been well received. We know that we're really past the worst of COVID. The risks are on the decline. Should we be thinking now of double-digit growth, would you say? Would you say the economy is poised for takeoff, in a sense?
Yes, certainly. I think as an organization, we have been saying that we are quite confident of a V-shaped recovery rather than a W-shaped recovery. So, and there are lots of trends towards that. We've seen that e-way bill has gone up, electricity generation has gone up, and certain demand for products have gone up. So a lot of key indicators are pointing towards a directional growth of double digit for next year. The agricultural crop is very good. So that means demand should come from rural areas as well. There's a certain amount of pent-up demand because of the pandemic, but certainly some demand will also come back with, as we're listening, that wages have not really come down and people are getting increments and so on and so forth. So clearly there is an impetus towards a higher growth rate for the next year.
Dr. Shekhar Tomar, would you say that the economy is poised for takeoff?
I mean, there's definitely a bullwhip effect because there's a lot of slack from last year. So a lot of people who were planning to do some investment, they were waiting and watching. And so now all that is going to come in. So you can think of like two effects. All that pent up demand or investment, both are going to kick in. And so for the coming year, I wouldn't be very surprised if we grow double digit, but the question is whether we are going to do that next year as well or not, and where we are going to be the year after that. Because the double digit growth this year will help us cover the shortfall in the last year. And I hope we'll be able to cover it well. And then we'll see how it goes. But if the momentum builds up it's a economy, there are animal spirits. If the momentum builds up, then we'll have a better growth even in the next year.
So you've given a little longer term perspective. We were talking about the calendar year this year. And do you see now, fiscal consolidation being achieved quicker as a result of projected double-digit growth going forward? And if so, I mean, would that help the government because it's getting more revenues in managing inflation, infrastructure spending, and the like on the supply side?
So I would be a little bit cautious on that end, although I would say, like, at least in the public statements, the government has been saying that they are not so much worried about fiscal. But if you really look carefully at the budget, they have been very circumspect, which I think is a good thing. They didn't increase the expenditure too much. I think we should be able to control it. I mean, of course, they are taking the double-digit growth into account when they projected the fiscal deficit for this year. But remember, we are spending more than last year, and we are going to be at the level like 2 years ago in terms of our GDP. So there are some constraints there, but because the government has been circumspect and they understand the risk, I think we would be able to manage the deficit well.
And would you see there being suitable appetite, in our country for amongst the private sector, especially for disinvestment, for the government to meet its disinvestment targets? And do you see this, giving a positive signal for investment, the whole investment climate in our country?
Absolutely. I think the first time the government has used the word privatization versus disinvestment, and that really indicates a different directional change in terms of how they view this activity. And one of the mantras or the pillars of the budget was maximum governance and minimum government. So clearly, government is trying to get out of the areas that are not strategic, and this direction is very key. This will also help in a lot of new companies to enter areas which the government is running, clearly signaling more growth as prospects, and they will also put in perhaps more money so that that particular business starts running better and more efficiently. So there is a clear indication that divestment, privatization, this time around seems to be a hot subject as well as something more doable.
Does it create a positive climate, investment climate for FDI?
I mean, for the FDI, I'll talk a little bit later because that's a little bit of worry on my end at least. About the general disinvestment, as you know, you can't disinvest everything at the same time. So even for people who think that you can disinvest like very quickly, I don't think that's a viable strategy because you want all the assets to get their good valuation. And so having a plan over the next 2-3 years is going to help there. Of course, there is appetite. I would say they were a little bit slow because we are already seeing a bull run, at least on the stock market. So we should have offloaded some of the assets last year. But yeah, of course, that's a post-hoc analysis because we have already seen the bull run now. But I think we missed at least the last 3-4 months. I hope we can push the pedal a little bit harder. But yeah, you can't go beyond a certain limit because you can't sell everything at the same time.
And what about the climate, investment climate for the country?
So that's a little bit tricky issue. I think we are still stuck in the old mode in the sense that we change regulations too quickly, too often, and we are also greedy at sometimes. So I'll just give 2 examples. Like for the Vodafone case, I think we need to be a little bit big-hearted, like let a few things go away. It's a case from the last government, and there's no reason to continue pushing the pedal on the Vodafone case, just to send a signal to the international market that we are open to investment and we are not going to change rules after you have come in. And similarly, it also applies on the export and import side. I think although all the initiatives, I think the PLI scheme is good, but otherwise, if you think about it, we change our tariff structure too quickly. And in an interlinked world where, things go in and out very quickly, so it can happen that the same product first comes in India, then goes out to Singapore, and then comes back again. So the supply chains are very interlinked. So every time you change the tariffs on like one given product, it's very difficult to change those supply chains. And I think if we want to get integrated into the international market, we should really come out of this import substitution mindset because the world players are very different. They're not living in the 70s. The supply chains are much more complex. And I don't think standard measures by the bureaucrats can really help over there in curbing our import tariffs.
Has Atmanirbhar Bharat, the brand Atmanirbhar Bharat, and the focus of the government, has it helped in improving consumption in our country? Has it helped to create jobs and actually strengthen components in the supply chain? You yourself, this is your strength area, isn't it? Supply chain management.
That's right. So, I think Atmanirbhar Bharat is the clarion call of the Prime Minister is now being implemented as we speak. And there are various components to that. One clear component is that how are we going to reduce imports? So if you're going to reduce imports, which means that the products that were not produced in India, how can they be produced here? So their government has created an incentive plan around PLI, the production linked incentives. Now, this not only incentivizes domestic companies, but also foreign companies to come and establish their base here so that they can start building capacity here for products. And not just for the Indian market, but also for exports. And this is what we call the global value chains. How can we attract as a country these global value chains, not just for a resilient India, but also use this as an opportunity, as a springboard to really export out as well to various parts of the world. India has a tech power. India has the capabilities of doing this. And with things like the PLI, I think we are heading towards an Atmanirbhar Bharat.
Okay, but specifically, I mean, has it created more jobs? Has it, helped us to understand our own country a little better, buy Indian products, be Indian, buy Indian, vocal for local? All these things are linked, isn't it, to Atmanirbhar Bharat?
I think the job creation has started. Some of these companies have started recruiting as well as setting up these facilities. So it's, that the entire PLI scheme has not been announced yet. There are a few sectors that have been announced already. So work has already started there. I know for a fact when we speak to a lot of our members, they have been insisting on buying Indian products. They insist that please check whether this product is made in India or not. We do as an organization as well. So I think that it's a change that is going to take a little longer. I think we've been all used to the fact that whatever is available, let's get it irrespective of the origin. I think we are more conscious of that origin now, and that consciousness would possibly help us in the future.
So, as I said, I'm a little bit worried on the export market side because we are really not competitive. So some of the schemes like PLI might help us because we are giving benefits to certain industries to grow, but that doesn't mean giving them crutch for a very, very long time. It also doesn't mean that we should not prevent dumping by China of cheap goods. There can be some precautions over there. But on average, I think we need to think about the general financial situation in the country, whether investment is happening or not, and also on the land and labor side. There has been some movement on the labor laws, but not so much on the land side. And if we really want manufacturing to pick up, then we really need these three strands to work together. We saw some action on the financial side in the sense that now there is some schemes coming in so that bad loan crisis is resolved. And I think if we can resolve that faster, that would kickstart the investment cycle.
When we speak of growth, it must be accompanied by inclusion. Do you see the financial inclusion program of the government having created enough, having gone deep enough to help this to be truly inclusive? Any growth that comes can be distributed quite easily.
So I have a slightly different perspective on it in the sense that I don't buy the standard development economist idea that, the growth has to come for everyone at the same time. We also need to think of it from the perspective of what the government can spend. And when the growth comes in, the only reason that we are able to roll out so many subsidies, so many support activities directly to the final beneficiaries, it has been possible because of the growth in the past 2-3 decades. So we should think of it from that perspective. And definitely financial inclusion is very important. And the JAM Trinity, which has happened, the developments in the last few years, they have been great. And the private sector is also involved there. Everyone is doing, and just think of it. If we didn't have this infrastructure at the time of COVID, we wouldn't have been able to transfer funds directly to the final beneficiaries. So in that sense, those benefits are paying off now, the investments that we made 3-4 years ago. And so we really need to think from that perspective. We shouldn't really push the poor or the other classes to adopt financial inclusion because they would anyway adopt it if it's beneficial. Okay. And they have realized it. So I think it's a win-win situation if people adopt it on their own. And the infrastructure should be there to allow that kind of activity.
So the earlier model for growth had, urbanization and it basically led to a lot of consumption and demand, which was urban driven. That also led to inflation, cost of living, etc. But urban demand has been less than rural demand actually in this recovery to a large extent, isn't that? That's what reports suggested. It's the rural demand that actually helped the recovery to take place in the revival. Would you see, us not, as a country, because there's such a lot of migration taking place even now to the urban areas, would you see us not spending enough time developing this potential of rural demand?
Clearly rural demand has helped the country a lot in the last few months. And also the agricultural crop seems to be very attractive in terms of the output looks very attractive. So that would mean that rural demand will continue. And yes, now urban jobs have come back with a bang. So there itself, we are seeing that consumption trends will start picking up. We also know that in urban areas, services have not been utilized as much because of the pandemic. Restaurants, hotels, the manpower related services have been utilized less. Now with vaccination happening and the confidence of people building up to go out more and more often, urban demand will also start coming up as well. And clearly, there are indications towards even areas like real estate where people are saying that if I'm going to work from home, I need a little bigger apartment. So there are trends towards that also. Or there are trends towards I need another television at home or maybe another digital device because either the schools are being run from children attending classes from home or someone's attending to work from home. So lots of these trends are visible and that would certainly spur up demand going forward.
There is definitely potential. It really depends on what region you are in because there is a big heterogeneity or there are big differences across the states. So all states don't have their agriculture at the same level. So there is definitely a very large potential there, which we haven't used till now. Definitely Eastern India, for example, or even mid and the South. I mean, most of the growth and development has been in the North up until now. So that is definitely a potential there, but urban areas are what we should focus on in terms of the growth engine of the economy. If we are talking about development in manufacturing, that's not going to come from the rural areas. So the focus should be on modernizing agriculture to whatever extent possible, at least reach the global standards in terms of productivity, but there is a certain limit to that. So the growth is going to come from manufacturing. I think we need to put a little bit more focus on tier 2 and tier 3 cities, and I would even say towns, because they are going to be the hubs of innovation and growth in this country.
And would you see the stressed assets of banks also reducing and repayment schedules coming back on track? I mean, there is the presumption that we are growing and all this is going to help. The growth momentum will pick up. And would you, if that is the case, I mean, how would you look at the government's role in the banking sector after that? Would you see it declining and the PSUs, how would you look at the PSU banks?
I mean, that's not even a choice to make. I mean, the PSUs are not the leading banks in India. Whether you accept it or not, like sooner or later, they have to go away in the sense if they are inefficient. If some of them are efficient, they would continue to be working. Now, coming to the bad loan side, the government had been trying to ignore it for a while because it requires a lot of direct funding for it. And in this budget, they have at least directly put aside 20,000 crore rupees. And I think that's a good start. Going forward, yeah, if we don't clear up the balance sheet of the banks, it would be really difficult for investment. But yeah, it again brings back the same point that the government has to borrow slightly more this year, which makes it difficult for the private firms to borrow from the same market. It's the same set of people, same market everyone is borrowing from. Yes. And so at the end of the day, it probably makes sense to clear up the balance sheet of the bank so that, there is enough liquidity for everyone to borrow from.
When we talk of growth, we talk largely about potential for investment and opportunities for people because, now we're talking about double-digit growth this year. And I mean, entrepreneurs like you all would probably take advantage of this. But what about the average man? How do they take advantage of this kind of India's growth story? How do they participate? How do they jump onto the bandwagon in a sense?
So I think the average Indian as a consumer is really going to benefit because it's becoming, and it is a buyer's market. So consumers tend to get advantage of that in terms of pricing for products. I mean, look at prices of milk really. I mean, they've not really gone up in the last or marginally in the last decade or so. So that it clearly indicates it's a buyer's market. There's enough capacity that has been created. So average Indian gets a benefit there itself when the production is happening here. There is growth created, demand that is there. Subsequently, also an average Indian will get benefit in terms of possibly better wages as they are getting more and more skilled. So they will get that benefit. Growth opportunities when new companies are coming, which means that more job opportunities would be there. Areas like the stock market is a great place where companies are listing and now taking that benefit. So people can invest some of their savings there as well, diversify their own personal holdings so that they are able to resist, to be better, to have more resilience when there is a downturn like this. So there are lots of ways an average person is going to clearly get benefit with growth that happens all across the spectrum.
How should the average Indian participate in India's growth story? Help, jump on the bandwagon in a sense. Most of them are actually just employees, but they may have money, and savings is converted into investment, right? That's the classical economic model.
So on the savings side, Indian overall savings has been falling down in the last 1 decade. So we were above 30% of the GDP, like that was our saving level, around 33, 34%. Right now, we are cumulatively down to around 27%. So we are not saving as much as we used to. So we probably need to save more to be able to invest and then to grow more in the future. Now coming to your question about how that should be allocated, at the end of the day, someone is going to invest it in different assets in the market. So the aggregate level of savings also matter. But if individual investors are thinking of investing, and of course, this is not an investment class, so yes, I wouldn't be talking about exactly dividing it between different assets. So you should be a little bit careful. You should diversify. Standard assets, safe assets should also play a role. And at the same time, given the bull run, the stock market, and the growth story for India, which would be there for the next decade or so, we should also invest in the markets because that's where the higher returns are going to come from.
So would you see us reaching a $3 trillion economy this year and building up rapidly from there to hit that $5 trillion mark, which was targeted for 2025? And I mean, we moved from 1 trillion to 2 trillion. It just took us 6 years, and we were at almost 3 trillion. We were 2.8 trillion pre-COVID, and then we fell back. Would you see us, now regaining the momentum and then really reaching that 5 trillion target on time?
Yes, the pandemic year has been challenging, as we know. So, and there is a negative GDP growth in the first 2 quarters. So that catch up is going to be perhaps maybe a year later or a year longer in an ideal scenario with the prospects of growth that we are seeing now. So we are quite confident that maybe a year or 2 down the line, the $5 trillion can be reached before what it was in terms of the planning. So this COVID year, if you do discount it, then yes, a year and a half more is what we think that we can get to the $5 trillion economy.
So we are like 2.6 trillion, 10% will bring us to something like 2.9 if there's a 10% growth. So let's see how lucky we are. If we are like clocking around 14 to 15%, then we would definitely hit 3 trillion mark. But yeah, we would be somewhere in the ballpark of 3 trillion. So it's a good number to have, but I think we shouldn't really worry too much about it. Sooner or later, like in 2 months next year, we'll definitely be crossing it.
Okay, final question is, arriving there, we'd require startups to have better valuations, and now the markets, the stock markets are at pretty high levels. Would you say that, this is the time for them to go in for IPOs, some of these startups, and try and get good valuations and, get us to that $5 trillion target faster?
The startups, their contribution to the economy is to be seen. I think their listing will not really help the the $5 trillion economy directly, but indirectly, yes, it creates more jobs if they are listed and they're able to use that money to really expand their operations and grow. And hence, we are moving towards that $5 trillion economy. Yes, it is a great time, I think, for a lot of these startups to think about listing, but also a great time to innovate in terms of the acceptability of so many things are higher from a digital perspective. I mean, we've all changed our behavior in this pandemic with omni-channel kind of an experience for retail. Instead of just buying by going to a store, we are also buying a lot online for that matter. And this is a very, very obvious and visible trend, and it will impact many areas and industries, and hence a lot of potential for new startups to come in as well and innovate. So a great time and great potential for not just starting new ventures, but also ventures that are already existing to capitalize on the boom in the markets.
I think some of them are on the verge of the IPO, but not most of them, because the market has been low for a lot of gig economy sectors as well. If you think in terms of like taxi services or the food services were better, but a lot of services have been hit during this time period. And we are actually good in IT-enabled services. So some of them might actually be benefiting from IPO in the very, very next future. But some of them have also taken a backseat if you think of like real estate or hoteling chains. So yeah, it's a mixed bag. Some sectors are going to get benefits from it, while some others not so much.
And with that, we conclude this program. I'd like to thank our guests, Vinit Agarwal, President of ASSOCHAM, and Dr. Shekhar Tomar, Assistant Professor, ISB.
Thank you, my pleasure.
Thanks so much. It was a pleasure.
Thank you very much for being with us. Namaskar.